Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities cheered an improving global trade policy outlook. The US equities gained on all 5 trading days of the week, supported by easing US-China trade tensions, while bond yields fell after a set of softer US macroeconomic data raised expectations of more US Fed rate cuts this year. Asian equities broadly rallied on easing US-China tensions, while the first quarter earnings concluded on an improved note with slight beats on estimates. Gains, however, for the week were led by Indonesia, which rallied 6%, Taiwan and China rallying around 4 to 5%, while Thailand fell 2%, Philippines and China recorded a gain of 1% each. Back home, Indian equities gained for the 4th consecutive week. The Nifty index rallied almost 4% for the week, recording the longest streak of weekly gains in 2025, driven by easing Indo-Pak tensions, continued foreign investor inflows, and better than expected earnings reporting during the week. Broader markets outperformed the large caps, with the mid-cap index up 7.2%, while the small-cap index recorded a gain of 9.2% for the week. Overall, sectoral performance is strong, with all sectors recording a positive gain for the week, led by realty, metals, and capital goods, which rallied over 7.9% for the week. However, pharma and FMCG lagged peers with gains of 2.7% and 2.6% respectively. The fixed income market had a strong week. Indian government bond yields logged their biggest weekly decline in over 6 on strong demand as investors rebuilt position after last week's sell-off, comforted by falling inflation data and robust banking system liquidity with the central bank buying bonds. The yield curve steepened with the 10-year Indian government bond yield falling 11 basis points to 6.26%, while the 3-year and 5-year government bond yields fell 17 basis points and 13 basis points respectively. Brent crude oil rose for the second consecutive week to close at $65.4 per barrel, supported by easing US-China trade tensions. However, the gains were offset later in the week amid higher supply expectations from OPEC Plus and allies, while the US and Iran inched closer to a nuclear deal. The INR fell 0.2% against the USD to close at 84.5 as dollar demand remained strong from domestic importers, and a stronger US dollar and higher crude oil prices negated the impact of robust foreign investor inflows into equities and falling US bond yields. Coming to macro updates for the week, the first was on India's consumer price inflation, which rose 3.16% year-on-year in the month of April 2025 compared to 3.34% recorded in the previous month. This reading was also the lowest reading since July of 2019. Food prices, which account for nearly half of the consumer price basket, rose at 1.8% year-on-year, the least growth recorded since October of 2021 and down from the 2.69% recorded in the previous month. Meanwhile, inflation was largely unchanged for housing and picked up sharply for fuel and light. On a sequential basis, consumer prices rose by 0.31% month-on-month, rebounding from the 0.26% drop recorded in the previous month. Second data was on India's wholesale price inflation, which rose at 0.85% year-on-year in the month of April 2025, down from a 2% growth recorded in the previous month. This marked the softest pace of increase since the month of March 2024, largely driven by a significant slowdown in food prices, which recorded their smallest increase in over 18 months, with vegetable prices plunging 18.3%. Manufacturing inflation eased to a 3-month low of 2.6%, reflecting softer botanical products along with a decline in basic metals. Additionally, fuel and power prices fell, weighed down by lower prices for LPG and HSD. Meanwhile, primary article prices fell 1.4%. The third data was on India's trade deficit, which widened to USD 26.4 billion in the month of April 2025, widening from the USD 21.5 billion recorded in the previous month. This was the second highest data after the record deficit recorded in the month of November of 2024. Imports rose 19.1% year-on-year to USD 64.9 billion despite the decline in oil prices, as businesses likely front-loaded foreign purchases before the start of a potential trade war. Gold imports totaled USD 3.1 billion in the period. In turn, exports grew at a softer 9% year-on-year to USD 38.5 billion. Exports to the US, which is India's top exporting destination, soared by nearly 30% to USD 8.4 billion despite being hit by tariffs.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.